Now, Nigeria's bonds market has been on a bullish run all week, with buying interest especially witnessed across some maturities. This is despite low system liquidity levels being reported. Femi Ogundimu is a fixed income dealer at Access Bank. He joins me now from Lagos for a recap of this week's activities at Nigeria's fixed income market. Femi, glad to have you join us on Parliament West Africa. Shall we start by having you
Good
talk us
afternoon.
through the drivers of activities this week?
Okay, so the fixed income market has been pretty active the past 1 week. This is despite the fact that liquidity in the market has been very low across the week. We've seen yields at the money market at 14, 15, 16 levels. But despite this, we've seen demand on the bond space. We've seen bullish sentiment from the beginning of the week up until today. We've seen buying sentiment. Yields across the maturities have dropped about 57 basis points for the benchmark bond. And now, I mean, for the drivers, right, it's just because there's no alternative to investment currently. And in the hands of investors, they have liquidity. Liquidity in the system is different from liquidity in the bank, actually. So for the banks or the system itself, they have liquidity. But for the investors, they have the funds to invest. I mean, for the PFS, for instance, they have the regular income inflows that they get. So because of this liquidity that they have, and without alternative investment, you already know that the treasury bills arm has been, the yields have been really low. The NTD is at 4% thereabout. The OMO is even available to most of the local corporate investors. So all the investors now have directed their attention to the bond space, where you've seen buying sentiment across all maturities, from the short tenor to the medium and long tenor.
So it's been a win-win for the bonds so far. I'd like you to speak to the nature of interventions that we saw from the CBN this week.
This week, the CBN intervened in the FX market, particularly for the SME and invisibles. We saw them intervene as usual, the institute normally do. But in the FX market, actually, we've seen positive response from the INE window. So it's affected the FX rate. We've seen depreciation in the currency as of yesterday. I think it closed at about 3.287.2. On Monday, it was around 3. That's about 1 hour depreciation, 1 or 2 depreciation over the week. If you notice, there hasn't been OMO auction. There was no OMO auction this week. Now, because of that, there hasn't been any foreign inflows, and that's the reason why you've seen positive funds in that INE window. So on the FX for the exchange rate parts, we've seen just a depreciation in that market.
So speaking of the INE window specifically, what do you reckon conversations around the harmonization of the multiple FX windows in Nigeria will mean for that segment of the market going forward?
Well, that will bring some respite to that market. I mean, we have like 4 different rates. The official rate at 361. We have the NAFEX rate at 387 thereabout. We have the SME at 387 as well, 357 dependent. We have the parallel market at 450. I mean, if they unify the rate, it will bring more confidence, because sometimes when investors are coming in, they try to price the market based on where they feel that they can access funds the most. And, the INE window is where they can access the funds the most. So if CBN is doing a 361 and NAFEX at 387, it's, I mean, they can, the trades or they'll be benchmarking their activities on where they feel that they can easily enter and exit from, which is the 387. So unification will bring some calm into that market, and probably also influence into that market.
Femi, what are your thoughts on the yields trajectory across the market? Do you think that they are sufficient enough to pull interests?
Well, when you talk about risk, when you talk about interest, you consider risk as well too. Okay, we've seen our reserves going up in recent times. Currently about $36 billion. We've seen oil price trending higher, which is about 42. Definitely, that should reduce the risk attached to Nigeria as a country. And so, if you're talking about foreign portfolio investors, they should actually bring them in. However, they are rich shoppers. If you can get better rates in other countries, I mean, I think they'd rather just go there. So currently, our rate here is about 8%. It doesn't seem to attractive. I mean, you will know that Earlier this year, we're seeing our 13. From last year, we're seeing about 15. And so we're talking about 8% now, 9%. But of course, on the CBN side, they really want to reduce the cost of borrowing. I'm not sure. I guess that's why they've dropped rates to those low levels at the moment. So in terms of interest, I mean, once there's no alternative for the investors, they will have to take what's available. I mean, if you look at the bonds market, even though the yields are low, we can continuously see buying interest. The 2050 bond that was at 12.6 like last month, that today is trading at 11.2. And this is simply because once there's liquidity in your hands and you don't have an alternative of investment, you are bound to invest in that market. So so in terms of yield and interest, I feel that once there's no alternative to investment, the yields will always be attractive to the investors. I mean, other countries are often lesser than that, maybe 2-3%, 4% in some cases. So I think a 10, 9, 11 is still really attractive.
And from the trading activities that we saw during the week so far, which instruments got more attention, the longer dated or the shorter term tenors?
The demand has been across all maturities, but more interest on the 2023 bonds, the 2049, 2050. So for the short tenor maturities, more of the 2023, which currently trades about 5.96% as of today. For the 2049, we've seen interest in that one, and I think it has really affected. I mean, earlier last week it closed at 11.9. It opened on Monday at 11.6. As of today, we are looking at 11.2% thereabouts. So, and still, there's still demand on those maturities. So for interest on the 2020, we've seen interest on 2023, 2027 for the mid tenor, and the 2049, 50 for the longest tenor.